Welcome back. Shares of SoFi surging this morning after the financial services company topped analyst expectations for Q3 and raised their full-year guidance for the third straight quarter. Joining me now to discuss the results is CEO Anthony Noto and Yahoo Finance's Brian Sozzi, also in the house. Anthony, just want to ask you about the results here. Doubled your GAAP net revenue, up 56% to $424 million. How would you describe these results?
The results really reflect the diversification that we benefit from because we are a one-stop shop for financial services products, and that we provide the ability to borrow, save, spend, invest, and protect. So we're seeing businesses like personal loans offset businesses like home loans and student loans, in addition to our SoFi checking and savings account, where we're offering 2.5% on checking with direct deposit and 3% later this week on savings, driving really strong account openings, which leads to deposits and it leads to more spending. We're seeing very strong trends in Invest, which is also diversified. We have single stocks as well as cryptocurrency, robo accounts, and ETFs. And then we also have a credit card and insurance products. So the continued growth that we're seeing with our sixth consecutive quarter of revenue is a reflection of our ability to overcome market volatility, the macroeconomic backdrop, because of the diversification of the businesses that we have.
Anthony, mentioned on the earnings call a little while ago that you haven't really had a year where everything came together. Do you think you have that year next year?
I think from a SoFi operating standpoint, we do. This year was spent transitioning to a bank. Last year was spent transitioning to a public company and navigating the process with a SPAC merger into a public company. The year prior to that, we were still in build-out mode on the technology stack platform. Our Galileo and Technisys businesses are doing quite well, and that was a big part of the story back in 2020. And all that time, really dealing with a depressed student loan refinancing business because of the federal student loan moratorium. So the economy is definitely volatile, and there's a lot of uncertainty. If it stays at a contraction of -2 or -1%, I think we're going to be well positioned to continue to drive great trends, especially with the student loan moratorium ending in December.
And when that does end in December, Anthony, what does that mean for your first half results next year? Is it a profit boom? What does it look like?
You know, there's so many variables that we'd have to know to answer that question. I think if the environment is exactly the same as today, which is unlikely, we would definitely benefit from a resurgence in student loan refinancing demand and still strong trends in the businesses that are doing well now. And we believe our home loan business will be in a much better position by early next year, given the number of changes that we've made in the technology and the ability to close faster on a purchase mortgage, which is more critical than in a refinancing market. So I feel like we're going into the year set up to do really well and set more records. If the economy stays where it is or slightly less from a contraction standpoint, we'll be in a really, really good spot. We want to compound growth. We grew 51% this quarter on a year-over-year basis in revenue with really strong profits and 61% member growth. We want to keep those growth rates quite high.
Anthony, your company is growing strong, and I want to know if there's anything in your earnings results that would indicate trends, maybe that reflect what's going on in the larger economy, something that might surprise us, or just kind of confirm what's going on, the big picture here.
Well, the higher interest rates as a result of the Federal Reserve raising them to try to offset inflation and cool down the economy is driving a refinancing boom for personal loans. People are refinancing out of revolving rate debt into fixed rate term debt. And so that business is definitely benefiting from that trend. The interest rates that we're providing on checking at 2.5% and 3% on savings later this week are a direct result also of higher interest rates. We are passing on the rate increases in our other products, and the deposits that we're getting are allowing us to do that at a lower cost. So there's a lot of complementary elements of our business where one fuels the next. We call that the financial services productivity loop, and that's what you're seeing play out in our results.
Anthony, switching gears just a little bit, as the former COO and CFO of Twitter, what is your take on everything we've been seeing there?
I would say, first and foremost, I think Twitter has unbelievable potential, and that potential needs to be unlocked through the right product innovations. I think historically, the company, what I've seen as great potential, it has the best content in the world, regardless of what's happening in the world. You can see that on Twitter. The challenge is the content is there. It's hard to extract it through the product interface. And there's always been this challenge of getting a consensus view where everyone on board inside the company or at the board level. And I think for the first time, you have a single owner and a single leader that could be decisive. And the reason that's so critical is you need to iterate at an incredibly fast pace to figure out what types of product changes will actually unlock that value. And it's really hard to do in a state where there are so many stakeholders that have a say. Now there's one that gets to control the decisions and the consequences and the accountability. And I think that's the right formula, whether it's the right team and they pick the right things and they execute well. I have no perspective.
What type of products do you think would work well? Does charging $50 to get on the platform or for the blue check mark, does that make sense?
I was having fun with the debate on Twitter, hopping into that conversation. I have a lot of insights of what would work, but it's not really in my position to talk about them. It's really up to that team to execute the way they see fit. But I think they should have billions of users, given the content they have that's so valuable, and they should be valued in hundreds of billions of dollars, not tens of billions of dollars, if they can unlock that value.
It looks like we got time for another one. I happened to be reviewing your Twitter feed earlier this morning. I know you're a big aficionado of the NFL, having served in an executive capacity there at one time. Any predictions for the season?
I don't have any predictions for the season other than we really love our relationship with Stan Kroenke, the Los Angeles Rams, and Dean Spanos, from the Los Angeles Chargers. It's been a great partnership with them. It's really provided us with the leverage and building our brand awareness that we thought it would. They far exceed our expectations with what they have at the venue. They just announced 2 shows for Taylor Swift at the end of her tour, which will be phenomenal. We had the Super Bowl last year. The Olympics will be there, as well as the World Cup, and this year the College Football Championship. So I call it the 8th wonder of the world. It's an iconic platform. Every artist, sports league will want to play on that platform. And it's been a great partnership that's brought us really strong credibility and awareness. So couldn't be happier with the relationship.
Anthony, I'm excited about the new Taylor Swift album. Big fan. Big fan. Huge.
I'm excited about anything that causes you guys to cover SoFi Stadium from a media standpoint. So
well done,
talk
sir.
about it as much as you can.
We're all getting excited here. Really appreciate you stopping by. SoFi CEO Anthony Noto and Yahoo Finance's Brian Sozzi. Thank you for that.